Hey everyone, and welcome back to the deep dive. We're cutting through the noise today to get straight to what really matters.
And trust me, this one's a bit of a wild ride.
We're talking about D-Wave Quantum, ticker QBTS. You might have seen the headlines.
Oh, yeah.
Its stock has surged by an astonishing 1,793% year-to-date as of, what, late July 2025?
That's right, nearly 1,800%. It's a figure that's certainly turning heads,
Absolutely. It's a meteoric rise, has the whole market buzzing.
and it perfectly encapsulates why D-Wave is, well, one of the most polarizing names in quantum computing right now.
So for this deep dive, we've got a stack of sources, financial reports, analyst forecasts.
Right, but also a really skeptical research report and even some candid takes from D-Wave's own customers.
So our mission today, explore this dramatic surge and really dig into the intense debate. Is D-Wave the future of computing, a real breakthrough?
Or, as some sources suggest, is there something else going on? Maybe more marketing hype than genuine innovation.
We'll get into the tech, the financials, the very different views on its real-world impact.
Yeah.
So what does this all mean for you, the curious learner, trying to get a handle on this?
Well, let's start with that explosive stock performance. Beyond the 1,793% year-to-date surge.
Which is staggering enough.
Right. QBTS is actually up over 600% just since last October. A lot of that is driven by investor excitement around next-gen computing, quantum AI, all that.
But it's a big week for them, right? Earnings are coming up.
Tomorrow, August 7th, D-Wave announces Q2 earnings. Analysts are expecting a loss of about 0.05 cents per share.
Okay, which is actually an improvement from last year's 0.8 less loss.
It is, and they're looking for revenues around $2.54 million, a 16% increase year over year.
What should listeners really be watching for in that report beyond just the headline numbers?
Good question. I mean, revenue growth is key, obviously, but I'd watch the cash burn rate closely and any updates on customer acquisition, especially recurring revenue versus those one-off system sales.
Speaking of which, Q1 financials were strong, but boosted by a big one-time sale, wasn't it?
Exactly. That was the sale to Germany's Jülich Supercomputing Center. A major public endorsement showed global interest. That definitely got investors excited.
And then there's the new product, Advantage 2. Sounds promising.
Yeah, prototypes are out. A full production 4,400 qubit version is targeted before year-end. They're hoping that drives adoption with better optimization and AI features.
Wall Street seems pretty bullish on all this.
Oh, definitely. The stock has a strong buy consensus, 10 buy ratings in just the last 3 months.
Wow.
Ruben Roy from Stifel started coverage with a buy $26 price target. He cited leadership potential.
David Williams from Benchmark. He reaffirmed his buy, too, right?
Yeah.
With a $20 target.
He did. He pointed to real-world value in logistics, drug development, AI training, using their annealing systems.
He also mentioned a solid balance sheet, something like $800 million in cash, though we should note other sources put that Q1 cash figure lower, around $304 million.
Yeah, that's quite a difference. Highlights the need to, read the fine print. But investor sentiment is clearly high. Options traders are betting on a big move, almost 15% post-earnings.
And big institutions are getting in.
Yeah, DE Arcus added over 12.5 million shares. That's a massive increase, over 9,000%. Vanguard and BlackRock boosted their positions too. It's not just retail hype.
Okay, so the market's optimistic, big money's flowing in.
Yeah.
But as always, there's another side of the story.
And this is where it gets really interesting.
We have to look at the counter-narrative, especially from Carisdale Capital. They've taken a short position.
Meaning they profit if the stock goes down. And their report paints a very, very different picture.
What's their main argument?
They argue D-Wave's core tech, quantum annealing, is basically a niche offshoot developed decades ago, largely abandoned by the industry.
Abandoned? Why?
Fundamental limitations, like needing to reformulate problems into this specific mathematical format called QUBO.
QUBO. Okay, what's that exactly, and why is it a problem?
Ah, right. QUBO stands for Quadratic Unconstrained Binary Optimization. Think of it like a very specific puzzle format D-Wave's machines solve.
Okay.
But Carisdale says forcing real-world problems into QUBO is cumbersome and lossy. You might simplify too much, lose accuracy, inflate the problem size, create instability.
Like fitting a square peg in a round hole, maybe?
Kind of, and it gets worse. They say limited qubit connectivity forces you to use fragile chains of physical qubits just to represent variables.
So most of the qubits aren't even computing.
Exactly. They claim up to 90% of qubits might just be for representation, not the actual calculation. Imagine having thousands of qubits, but only a small fraction do the work.
That seems inefficient.
And here's a kicker. A former D-Wave engineer apparently admitted there is no proof that any optimization problem is solved faster using D-Wave systems.
Wow. No speed advantage.
And multiple academic studies allegedly show little to no scaling advantage over classical methods.
So if you're not getting speed, what are you paying for? That's a pretty damning perspective, especially from a former insider.
Which leads to Kerrisdale's next point, cost. They say D-Wave services are dramatically more expensive than classical solvers.
How much more?
Often by an order of magnitude or more. A standard proof of concept might cost $350,000.
Ouch. Compared to classical.
Which are often cheaper, sometimes even free for academics. So you have this expensive tech, but maybe no real speed advantage in practice.
So that brings us to the hybrid controversy. This seems key to D-Wave's strategy.
It is. They push hybrid solutions, their annealer plus classical hardware to tackle big problems up to 2 million variables. Sounds great. But Kerrisdale flags that D-Wave refuses to disclose to customers the relative contribution of the quantum versus classical parts.
The black box problem.
Exactly. And this came up a lot in the sources we looked at.
And former insiders have things to say about this.
They do. Some claim hybrid means almost entirely classical, that the quantum part is minimal, often cosmetic.
Cosmetic, just for marketing.
That's the implication. Its actual value was apparently debated internally, described as highly questionable. One former engineer said, "If I had to bet, I would say almost entirely the classical system."
That really fuels the skepticism. If they won't show what's under the hood, you start to wonder why.
It does suggest they might be walking a fine line, using the quantum label without maybe having a fully proven quantum advantage.
And what about the customers themselves? What are they saying?
Well, the perspectives are quite revealing. An R&T manager at Airbus said they use D-Wave for experimental research, but not for real-world optimization problems.
It's experimental only.
Yeah.
And they also said something about recessions.
Yeah, that these contracts might be the first cut in a downturn. That's not a strong vote of confidence for essential services.
What about others? BASF.
A project manager there said results were just okay, not something amazing. No new projects planned after one small deployment. And they also called the hybrid mix a black box.
And GlaxoSmithKline.
A former senior exec in scientific computing there had harsh words. Pure quantum solutions had horrendous noise, never really converge well.
And the hybrid.
For hybrid, they wondered, quote, how do I know it's not just a GPU sitting in a big fancy box with D-Wave written on the side?
Yeah, that was blunt.
And they felt optimization problems could likely be solved with regular computing methods anyway, just didn't see the unique quantum value.
Any others? Unisys. Amazon.
A Unisys logistics architect called D-Wave, great for school projects but not mature enough for real business problems. Hybrid solving didn't actually give us any benefits.
Ooh.
And even a former product manager for Amazon Bracket, which offers D-Wave, said the general feeling in the quantum community was that hybrid is probably just classical computing, the quantum element likely not doing anything substantial.
So Kerrisdale calls the glowing testimonials corporate innovation theater.
Yeah, arguing they often come from innovation teams, not people needing the best tool for a job right now.
Like that Pattison Food Group example.
Yeah.
An 80% scheduling improvement.
Over an Excel spreadsheet. Not exactly comparing against a state-of-the-art classical optimizer.
Right. As that former engineer said, maybe customers are helping quantum more than quantum is helping them.
It really makes you question the derived utility. Which brings up the qubit discrepancy question.
Ah, yes. Why does D-Wave have thousands, while IBM or Google have far fewer?
Because they're different kinds of qubits. D-Wave's annealing qubits are specialized, like fixed calculators for optimization problems only.
Okay, good at one specific thing.
Right. Whereas gate model qubits, like IBM's or Google's, aim to be general-purpose quantum computers. They're programmable, flexible. Each added qubit should exponentially increase power through entanglement, tackling broader problems.
That's not just the number, it's the typing capability. Apples and oranges, sort of.
Exactly. And D-Wave's own pivot to gate model seems stalled.
They announced that back in 2021, right? After dismissing it earlier.
They did. But over 3 years later, crickets. No detailed architecture papers, no fidelity data, no benchmarks. While competitors like IBM and Quantinuum are regularly showing progress, that's a concern.
And financially. Things look pretty weak, according to the skeptics.
Startlingly weak is the term used. Commercial since 2011, but never more than $9 in annual revenue, excluding system sales.
With a huge accumulated deficit.
$627 million as of year-end 2024. And as you said, IBM spends more on quantum R&D in a quarter than D-Wave makes in revenue in a year.
Their EBITDA loss was significant too.
Yeah.
$56 million in 2024.
Yeah, losing a lot on core operations. And revenue was flat in 2024. The small QCAS increase came from price hikes, while commercial customer numbers actually declined.
Not a great sign. And they've been issuing a lot of stock.
Massively diluting shareholders. Share count up 77% in the last year, sold at an average price of just $2.89. That really hurts existing investors, basically selling off pieces of the company cheap just to stay afloat.
While insiders are selling.
10 insider sales, 0 buys in the last 6 months. CEO Alan Barat sold over $14.3 million worth himself. That definitely raises eyebrows when the company needs cash.
How do they stack up against competitors like IonQ or Rigetti financially?
Well, IonQ looks stronger. $43 million revenue in 2024, predicting $95–95 million for 2025. They also seem to have a bit more cash on hand than D-Wave's reported Q1 figure. Rigetti had about $10.8 million revenue in 2024. D-Wave isn't leading on revenue metrics here.
And the valuation, that price-to-sales ratio, is astronomical.
Around 2100x trailing sales. That's described as a double-edged sword. It's valuing the company almost purely on future hope, not current reality. Trading at 79 times projected 2027 sales. That screams meme stock more than hypergrowth stock.
Finally, this quantum supremacy claim from March 2025.
Right. D-Wave said they were first to show supremacy on a useful real-world problem, a magnetic materials simulation. Big claim.
But experts push back.
3 quantum physicists interviewed by Kerrisdale called it highly misleading, said it was a toy problem, custom-tailored for D-Wave's hardware, not really industrially relevant.
Because real magnetic materials are more complex than their machine can handle efficiently.
Apparently so. They argued this supremacy claim falls well short of genuine real-world quantum advantage, another point of major contention.
So wrapping this up, what does it all mean? We've got this absolutely explosive stock surge.
Fueled by quantum promise, product launches, bullish analysts, big institutional money flowing in.
But on the flip side, profound skepticism. A detailed short seller report, critical former insiders, lukewarm or confused customers.
Highlighting persistent financial losses, fundamental tech limitations, serious questions about whether their core hybrid product is truly quantum or just, well, cleverly marketed classical computing. Some might even call it a gimmick.
So this deep dive leaves us, and you listening, with a really fascinating question to chew on.
In such a fast-moving field like quantum, what does it really take for a company or a technology to be revolutionary, to deliver genuine value?
And maybe more crucially, how do we, as observers or potential investors, tell the difference between a true breakthrough and just really effective marketing hype, especially when things are still so early?
Something to think about. Thanks for joining us for this deep dive.
We'll catch you next time.